Hello everybody, this is Lara with your weekly analysis for gold for the trading week ending Friday 1st of October 2021. The bearish wave count is still preferred. I expect a bounce now to end within a target zone 1775 to 1777. And then I expect the downward trend to resume to the next target for a large interruption, about 1406. If that target zone for the bounce is wrong, it may be too high. It is also possible it could be over at this week's high. The bullish wave count, if your own analysis is bullish, you may choose to follow that Elliott Wave count. That expects upward movement to a next target at 2078. If that target is wrong for the bullish wave count, it may not be high enough. Elliott Wave analysis first, classic analysis last, and for a long time I have still preferred this bearish Elliott Wave count. This wave count at the quarterly chart level would see a huge expanded flat unfolding. Here's an example of an expanded flat, A, B, C. This is an expanded flat in a bear market. A and B subdivide as three wave structures, and C moves at least slightly beyond the end of A, as it has in this instance. Usually they move further beyond the end of A. This one did move a bit beyond the end of A. And so that's what an expanded flat looks like. And this is expecting that an expanded flat is unfolding in the opposite direction. A complete off to the left of the chart at the December 2015 low, B complete as a double zigzag, and C to continue lower as an impulse, with cycle wave 1 a leading expanding diagonal, cycle wave 2 a deep zigzag, and cycle wave 3 may only subdivide as an impulse. Cycle wave 3 will be labelled at primary degree 1, 2, 3, 4, 5. 1 is short, I expect 3 to be a long extension, 4, and then I expect 5 may also be an extension. The target for cycle 3 is for it to reach 2.618, the length of cycle 1, at 887. If primary 2 continues sideways as a combination or double flat, it may not move beyond the start of 1 above 1915.42. I have to leave the invalidation point here at the weekly chart level to outline the risk to this wave count. Let's take a look now at the daily chart, where the high for cycle 2 is this point here. From this high to this low, this is a really good looking 5-wave impulse. I'm labelling this primary wave 1 and our primary wave 2 an expanded flat labelled A, B, C, subdividing 3, 3, 5. Intermediate C is an ending contracting diagonal which has managed to move beyond the end of A by a little, avoiding a truncation and a very rare running flat. Where 2 ends, 3 begins. Primary wave 3 may only subdivide as an impulse. It will be labelled at intermediate degree 1, 2, 3, 4, 5. Intermediate wave 2 may be unfolding as an expanded flat, A, B, C. C has now moved beyond the end of A, and it is possible it could have been over at this week's high. If my target is wrong, it may be a little bit too high. I'm labelling from this high to this low now. I'm relabelling this as a complete 5-wave impulse. It has a really good fit. I did outline this idea in last week's video, but I didn't chart it for you. In hindsight, that would have been a really good idea. It fits really well. 1, 2, 3 is the longest. 4 exhibits alternation with 2 and remains below 1 price territory, and then 5 moves beyond the end of 3. If this is where intermediate 1 ends, this is where intermediate 2 begins. It may be unfolding as an expanded flat, A, B, C. C to possibly move a little higher. The invalidation point is up here. Intermediate 2 may not move beyond the start of 1 above 1833.19. However, I wouldn't expect it to get anywhere near that point. If it does reach the 0.382 Fibonacci ratio, about 1774.97 or around about 1775, and then keeps on going higher, I'd look out for it to end at the 0.618 Fibonacci ratio. But I don't think it will get this high. At 1797.21, which may also be where it finds resistance at the upper edge of the base channel. So this channel is important. Draw the first trend line from the start of primary wave 1 to the end of primary 2, and then place a parallel copy on the end of primary wave 1. It is possible that intermediate 2 could have been over here, however. The strong downward pull of a third wave at intermediate and primary and cycle degree could force minus C to end only a little bit beyond the end of A. But I have calculated a target zone for you for a little bit more upward movement. At 1775, intermediate 2 would reach the 0.382 Fibonacci ratio of intermediate 1, and just $2 above that, at 1777, minor wave C would reach 2.618, the length of minor wave A. At the weekly chart level, this is an alternate for the bearish wave count. Instead of considering cycle wave 2 over as a zigzag, if we move the degree of labelling here down 1 degree, it's entirely possible cycle 2 could be continuing sideways as a regular flat. It could also possibly need to be relabeled as a combination. But let's consider what looks more likely here to be a flat, labelled A, B, C, to subdivide 3, 3, 5. B has passed the minimum required 90% length of A. B is a 93% length of A. So the rules for a flat correction here are met, and that length of B between 90 and 105% the length of A indicates a regular flat. Regular flats most commonly have C waves which reach equality in length with the A waves, hence the target at 1931. Regular flats also commonly fit within a parallel channel. Draw the channel from the start of A to the end of B, place a parallel copy on the end of A. We may see resistance at the upper edge of this trend line if price gets up there. Regular flats are equivalent to, in classic technical analysis terms, rectangle patterns. Cycle wave 2 may not move beyond the start of 1 above 2070.78. The other Elliott wave structures, which are equivalent to rectangle patterns apart from regular flats, would be combinations. The target for cycle wave 3 will need to be recalculated when cycle 2 for this alternate is met. I probably should take this off the chart for you, I'm sorry about that, but the lower target for super cycle C remains the same for both my bearish wave counts. Super cycle C would be expected to move at least a little below that December 2015 low, which I think was 1047. And it would most likely reach 1.618, the length of supercycle A, hence the target at 657. At the weekly chart level, this is a bullish wave count. If your own analysis using your preferred technical analysis tools is bullish, then you may choose to use this Elliott wave count as your pathway. This Elliott wave count, in my judgment, however, based on Elliott wave and technical analysis, has a lower probability than the bearish Elliott wave count. However, it is possible, and it's important to be open-minded, flexible, and consider alternates. So, what if the bull market began for gold in December 2015 and is continuing? What if it isn't over there? Well, we could be seeing a huge impulse unfolding higher. I'm labelling it supercycle wave 1. Within it, cycle 1 is complete well off to the left of the chart, and is cycle 2, and here's the end of 3. 4 could be over as a triple zigzag. 5 could have begun there as an impulse. 1, 2, 3, 4, 5. If 2 continues further, it may not move beyond the start of 1, below 1677.64. Let's take a look at the daily chart for this one, where the high of primary 1 is here. Primary 2 could be a zigzag, A, B, C. Primary 3 may have begun here. Within primary 3, intermediate 1 may be incomplete, with minor 1, 2, 3, 4, 5. Minor 2 could have continued lower this week as a double zigzag, and it hasn't moved beyond the start of 1. This is a strong bullish candlestick. I would expect for this count that minor 2 should be over there, and minor 3 should have begun. The target for primary wave 3, unfolding as an impulse, is for it to reach 1.618, the length of primary 1, at 2078. Within minor 3, no second wave correction may move beyond its start below 1722.77. Alternatively, at the weekly chart level, I'm still seeing for the bullish wave count a cycle degree third wave over here, and now I'm considering the possibility, what if cycle 4 is an incomplete zigzag, labelled A, B, C, with A leading expanding diagonal, B a zigzag, and C an incomplete impulse with intermediate 1 and 2 complete, and now 3 beginning, and then 4 and 5 to continue. I would expect C to find support at the lower edge of this channel, drawn from the start of A to the end of B, with a copy on the end of A. The target calculated this week for this wave count would be for C to reach equality in length with A at 1522, and cycle wave 4 may not move into cycle wave 1 price territory below 1303.51. It's still possible, however, that intermediate 2 could continue sideways as a double flat or a combination. I have to leave the invalidation point up here to allow for that possibility. It may not move beyond the start of 1 above 1915.42. If price does move above this point, then we would have some confidence in the first bullish wave count, but we would also still have a bearish wave count. Just going back, we would have this one. If price moves above this point, this would be my main preferred Elliott wave count at that stage. Okay, how much support from classic analysis do we have for bull and for bear? And why am I judging that bearish wave count to have a higher probability? At the weekly chart level, this week completes as a downward week. It's got a lower low and a lower high, but the candlesticks closed green. This is a hammer pattern, but I'm not going to read it as a bullish reversal pattern because it really is in more of a context of a sideways consolidation. Price has got pretty strong resistance, about 1835, and really strong support, about 1675. So at this time frame, price looks like it's consolidating, even though ADX says that there's a new downward trend. I would want to see a close below support before I really had confidence in that. We need to see price break below 1675 at the daily chart level with a close below that support level, and then I would have more confidence in a downward trend. For now, it looks like price is consolidating. This week, there is push from volume pushing price lower. We'll see that a little bit more clearly at the daily chart level because this is a little confusing. The colour is opposite to the movement. On balance, volume has a weak range. The supports, yeah, it's fairly weak. It was weakened here. It's tested once here. And the resistance line only has 3 tests, and it has a little bit of a slope. On balance, volume is constrained as well as price constrained. ADX is telling us there's a new downward trend, though, that does support the bearish Elliott wave count, or at least that alternate bullish Elliott wave count as well, possibly. That's entirely possible. ATR declining as price moves sideways within the consolidation zone. That's pretty normal behaviour for a consolidation. RSI is well in neutral territory. If there is a new downward trend in its early stages, then RSI has plenty of room to go before it reaches oversold. Stochastics also in neutral territory, didn't quite reach oversold for the end of this downward swing. We may have another test of oversold, or we could see overall choppy movement of price up to resistance while stochastics moves back to overbought. And MACD full ball bearish, supporting a bearish Elliott wave count. At the daily chart level, there is a little bit of support from volume for downward movement in these downward days, but now we get a strong bullish candlestick for Thursday. For stock charts data, this isn't actually properly a bullish engulfing candlestick pattern because the open for Thursday is a little bit above the close for Wednesday. So this candlestick doesn't actually fully engulf the real body of the prior candlestick. So that's why I'm not noting that as a bullish engulfing candlestick pattern on the daily chart. However, it is a strong bullish pattern. It engulfs this candlestick and these two as well. So that's really bullish, and it does have push from volume. However, for Friday we see a small inside day, a small doji, almost a doji, and it's got weak volume. So the upward movement could be over here with resistance holding about 1675, but if it continues and it breaks above resistance, look out for next pretty strong resistance about 1800. On balance, volume is also at fairly weak resistance. This resistance line has 3 tests. It's somewhat long held and it doesn't have much of a slope, so it's still weak but not too weak. Resistance at 1765 and resistance by on-balance volume could halt a rise in price, and that's why I say if my little target zone for that bounce to end is wrong, it might be too high, and it is possible that it could have been over here. It's met the minimum requirement for the Elliott Wave structure, and there's some technical evidence here from on-balance volume to just suggest it could be over there. So if that part of my analysis is wrong, that may be it. RSI is in neutral territory, and ADX at the daily chart level is also indicating a downward trend. There's plenty of room to go for this trend before ADX and RSI reach oversold and extreme conditions. ATR increases as price falls and then declines as price rises and moves sideways. It's overall bearish. Stochastics in neutral, well, returning to neutral territory, not fully neutral yet, and MACD full bore bearish. That's all from me this week with your gold analysis. I hope that all of our members are looking forward to a fabulous weekend.